Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be your mortgage rate update. And then also, is a recession really going to fix the housing market? I'm going to explain to you why a recession really doesn't mean anything. We need an actual crash. Now, to understand the difference between a recession and a crash, we're going to go ahead and explain that, but let's get on with the mortgage rate update. We're going to be pricing out 10 different mortgaging products. And if you are interested in any one of these mortgage products, 50% commission rebate or 0% listing on selling your current home, link in the description below, but let's get on with it. As of 9/7/2022, 30-year fix will be sitting at 5.24%. 15-year fix will be sitting at 4.16%. 30-year high balance will be sitting at 5.45%. DSCR loan will be sitting at 8.50%. That is a mortgage product if you want to go ahead and get in the rental business. You don't want to use the income that you have currently because you don't have enough money to go ahead and show the cost of purchasing it. That's what the rental income is. This is what a DSCR loan is. So the debt, which is the principal, interest, tax, insurance, and running costs, will cover the total rental. The rental will go ahead and cover the debt. Bank statement loan, where we don't even care about your W-2s and your bank statements again. This is another one of those non-QM, non-agency loans. That'll be sitting at 7%. This is where we go ahead and calculate your income based off of what you have coming into your bank account. For all you cash heavy buyers, those are what those are for. FHA 30-year fix will be sitting at 4.67%. 7.6 adjustable rate mortgage will be sitting at 5.38%. USDA, which is one of those zero down payment programs, will be sitting at 4.55%. VA 30-year fix will be sitting at 4.89%, and then the hard money fix and flip will be sitting at 9.70%. So that's going to be your mortgage rate update. Mortgage rates, you know, they fluctuate a lot. We did have a big decrease on it, but let's talk about a housing correction versus a housing recession. What is the difference? A correction versus a crash. That is the big thing. Now, a correction is going to be from this year. So the 365 calendar days that we have, that'll be a 10% decrease within a calendar year. A crash will be 20% within a calendar year. Now, would that really make a difference? No, it's not going to make a difference. Now, I'm going to go ahead and explain to you the stupid, ridiculous world that we got going in. Don't worry about what anybody else says. You want to know exactly the facts about real estate? Come and listen to this unbelievably gorgeous man talk. That's very subjective and very egotistical of me. But so, for instance, okay, right now, we've had a big drop. In 2022, we peaked at $400,000. Now, look at the chart that I'm going to pop onto you, okay? So the prices of home right now on average, still year over year, has been a 5.9% increase. It's sitting at $370,000. Now let's say, for instance, we do there's a correction. If we have a correction, that means that the home prices will drop $37,000. That'll be at $333,000. That's still not, look, before 2021, we're at we're well below that, into the high 300s or low 300s. Creeping and creeping and creeping, and then everybody lost their damn mind, like everybody lost their mind buying toilet paper at the beginning of the stupid pandemic thing. Now, let's say we go ahead and do a 20% correction, right? We do a 20% correction. That's still above the level of, above the level of 2020. So it's not going to make a big difference. And even the cost of purchasing a loan, which that's what a mortgage is, right? The cost of purchasing mortgage, before the pandemic hit in 2019, we were selling mortgages at about 3.5 to 3.8%. We're way above that. So even if we drop back to pre-pandemic levels, the prices of homes dropped at the pre-pandemic levels, we're still, the cost of acquiring a home is still way more expensive than it was before. So how much do we project it to drop? Well, that's going to be, we're going to have to wait and see what's going to be happening with that. Because the fact is the mortgage, to purchase a mortgage, now if you went and bought the same exact mortgage, everything was the same, your mortgage compared from this year to last year, your mortgage would be somewhere in between $1,600 to, you know, let's say $1,700. That same mortgage that would cost you let's say $1,500 to $1,700 is now at $2,300 because the interest rates increased so much at 5.66% versus the 2s we were beforehand. Now, the active listings, if you go ahead and see the active listings are steadily creeping up. It's been the biggest hike we've had, the biggest hike in listings that we've had since 2008. In a rolling 4-week period. 7%, which is also the biggest that we've had in price drops since 2008, has increased up to 7.5%. So this is going to be a slow bleed. This is not going to be something quick. You have to go ahead and give it a little bit of time to see exactly where the real estate market is. So will it be a crash? Will it be a correction? What will it be? Honestly, we just see that it's going to be a minor crash. Could be a little bit more. There's a lot of things that play into it. Like, we're still looking at the China market, because in China, so get this, in China, they boycotted mortgages. Those people said, you know what, we don't give a damn. We don't care about any of you people. We're going to go ahead and boycott mortgages. We're not going to pay mortgages. And then you have big metropolitan cities over here where commercial is taking a big hit. San Francisco is taking a huge hit commercially, because commercially, the amount of money that they got coming in on their GDP, which is, GDP is just a fancy word of, this gross domestic product is a fancy word of just saying how much money you're bringing in to the city or the state or the country as a whole. That's why when you hear they say, oh, we're in a recession because the GDP dropped, that's just the amount of money that we're bringing in internally, which we're not really doing too much of. So San Francisco's taking a big hit commercially because this whole entire remote work is still doing a crazy thing. And then we have the job market, right? Then they have the job market. People in the job market are saying, you know what, we are trying to get employees. We can't get employees. Well, why the hell would anybody want to work at a restaurant anymore? Why would anybody want to work at any type of job making, let's say, $20 to $30 an hour? So, and the only reason I'm not saying like that's a bad thing or anything. I think any job is great as long as you're doing whatever it is that you feel happy you're doing. But I have a little cousin, right? My little cousin, he comes up to me. I'm like, hey, dude, how's everything going? What's going on? He was like, yeah, dude, I'm doing all right. You know, I'm a customer service rep. Well, I'm like, well, how much do customer service reps make nowadays? He's like, I make $60 an hour. I sat back and I thought to myself, I was like, how the hell does a customer service rep make $60 an hour? And then he explained to me, he's like, well, I got 2 jobs. I do it simultaneously. He's like, all I have to do is meet my quota on how many calls I take in a day, and then I'm good to go. So he's double dipping in the course of a day, taking calls as a customer service person. He's like, I might even take on a 3rd one because this is so cake. Now, if you're making $60 an hour, sitting on your ass in your pajamas at home, not doing much of anything, you can just roll out of bed, eat some breakfast, you don't even have to get ready and go anywhere. Or go bust your ass and then go do something like, you know, get ready, go drive there, spend money on gas. Does that all really make sense to you? So yeah, there is going to be a big shortage, and as long as tech companies and these companies are all able to go ahead and have remote workers, that's all that's going to happen. Well, that's going to be your mortgage rate update. So for up to 50% commission rebate, 0% listing on selling your current home, or any mortgaging assistance, link in the description below. We got all types of products, 0 down payment programs, down payment assistance. We got all of that jazz covered, business loans, all of that. Your one-stop shop. Till next video, guys, I really appreciate you watching. Peace.